we are going to have an interactive session with the gentlemen on the dais. I would request everybody to please ask them whatever queries you have regarding all the Indian accounting standards that we have done and anything that you would like to ask them. Thank you.
চা দিলে ভালো না
So, to begin with, a couple of things on the Ind AS, just to, one of the fundamental assumptions which as an accountant we were following over the years was being conservative. So if I talk about, as an auditor or as a company, as an accountant, we were fine if someone was making an extra provision. We were not recognizing unrealized gains, so on and so forth. One of the fundamental assumptions under Ind AS, or if I say IFRS, is you just set aside the principles of being conservative. So I request each one of you, when we step out of the room, just set aside this conservative. It's fair value. We have moved from a historical cost, if I can say, to a fair value regime. So this is a landmark change which is there. It's about, we have to change our approach when we look at the things. The unrealized gains we were not recognizing earlier. Now the unrealized gains are something which will be recognized. So that was one of the important thing we need to keep in mind. The other important thing which I think is important is the IFRS is just not an accounting change. It's also impacting the business, the way we are doing the business, the way the agreements have been drafted. So if I put it rightly, all the long-term agreements, the agreements which are for a period more than a year, needs to be very minutely evaluated. There can be a lot of implications which may arise on the long-term arrangements. Say for example, if I give you a simple example, a power purchase agreements. If you are aware, a lot of companies enters into a power purchase agreements for 25 years, 30 years, 40 years. There is every possibility that these assets move out from the company to the other company which is buying this power. What was happening under Indian GAAP, we were first looking into whether the agreement is a lease or not. If it's a lease arrangement, then we were doing the accounting for operating lease or a finance lease. Now, even the embedded leases, it might be in the nature of lease, but explicitly it's not been defined to be a lease, also needs to be accounted as a lease arrangement. And it can have a lot of impact for the manufacturing concerns. You will see a lot of companies, say for automobile, you will find there are a lot of small scale industries which are catering to the car manufacturer. So tomorrow there can be a situation where all the assets which are there sitting in the small scale industries comes into your books. So the long term agreements needs to be evaluated very, very minutely.
Where rental agreements are there,
right,
and there is an escalation clause for every 1 year or something, those should be fair value?
No, so just to, if I talk about the lease agreements per se, the lease accounting remains by and large the same, which was there under Indian GAAP and which is there under Ind AS. The change which is there is under Indian GAAP, we were not evaluating the agreements which were not explicitly a lease agreement. Now we also need to evaluate those things.
Sir, can I make a statement here? What we need to look into in this fair valuation regime is that case of the income expenses, there will be historical cost basis or actual cost basis booking. But in case of asset liability or balance sheet items, there will be having each item you have to review it and fair value. And accordingly, the differences have to be accounted for in OCI or statement of income. Am I correct?
No, so if, just to put it, if you look at the definition of a revenue which is there under IS 18, the revenue has been defined as the fair value of the consideration received or receivable. So it's not like you are accounting on a historical cost basis.
Sir, still now though we are doing the appropriation of debtors has been debited and income has been created.
That we will do. But suppose an example, say a revenue we will realize after a year.
Okay.
So today we are recognizing 100 rupees. Tomorrow you will not recognize 100 rupees. You might only recognize 98 rupees.
Why?
Because 2 rupees is a interest component which is there.
Okay.
So there is a change.
Discounted value, correct.
So the discounted value which comes. So it's the definition you look at, the AS 9 which was there and the IS 18 which is there.
What you are saying, the repayment schedule of the bank, say, where there is a capital component and interest component in the EMI. So like that we have to discount it for any future incomes in which that amount will be intrinsic.
Correct.
Or embedded.
So if I talk from a loan point of view where there is an interest, and interest is at a market rate. So I can safely say there will be no impact per se. I am not going into other terms and conditions. Now say a loan which is a interest-free loan, that will have a. If you look at the substance of a loan which is interest-free, what's happening to the recipient of the borrowing? They are the beneficiary. I have got rupees 100 today, which I have to pay after 5 years, right? So when I am paying after 5 years, actually it's not 100. There is a present value impact which is there, which we are not recognizing under Indian GAAP. It was 100. Today I am crediting loan as 100 and cash in bank is 100. Tomorrow that will not be the thing. 100 will become 60, 50 something. And 40 rupees is your income, which you will recognize over a period of the loan.
Very often we take security deposit. Whenever we give out a property on rent, we take
Yes.
4 months or 6 months security deposit. So that's repayable without any interest. So with the application of this now, that also will have to be, because the security deposit will be refunded to say 3 years or 9 years.
Enjoy that money.
So very good and very relevant example. The security deposit, say your rent agreement is for a period of 9 years.
Yes.
I have taken rupees 100, which I will repay after 9 years. So this 100 today will be recognized at say rupees 50. And 50 I will bundle it up to 100 over a period of 9 years, and 50 will be recognized as a rent income over that 9 years.
That means
So what I am saying, today I have received rupees 100. So and I
have security deposit.
right, I have received security deposit as 100
From lessee.
from a lessee,
yes.
which I have to repay after 9 years.
Yes.
So today the present value of that 100 after 9 years, present value is 50. So
Say whatever.
say for example, for convenience it's rupees 50. So rupees 50 I have to pay after 9 years 100. So I have to make it 50 to 100, right? So this 50 rupees I will recognize as a income over that remaining 9 years.
That means you are saying that out of that 100, 50 rupees is the interest portion.
Correct.
Which is accumulated over a period
Correct,
of next 5
correct.
years or 7 years.
9 years.
Correct.
Since we are not paying that interest, that is our income.
Right. And just to add to this, it also uses the term expected credit loss. All of us must have heard about it. So say a retail company which has got thousands of stores across the country, and they are giving security deposit to the landlord. And when I am doing the early closure or the closure of the shops, I am say 5% times I am not receiving back the money. So I have to also make a probability of that on day one, that what is the amount which is expected not to be received, and that also needs to be provided.
So another thing, in case of debtors, say we receive that amount after 1 year or 1.5 years, but that amount is received only. So there is an interest loss for us, for the company itself. So that has also have to be computed.
Correct. So what you will do, there are two things which you need to look at. First of all, you will look at what is the contractual terms.
Contractual term is say payment within 60 days.
I am coming to it. So suppose the contractual term is 60 days, so that's fine. But there is a delay in payment.
Yes.
You receive it after 1.5 years.
Yes.
Now suppose I make a total sales of 1000 rupees in the year,
Yes.
and my past trend shows that rupees 100 is amount which I receive after a year.
Yes.
So rupees 100, when I told ECL, I will also build up the interest component for this rupees 100. So I have to take into the past how I have received my money, and then I have to discount that, even if it is not contractual.
That means out of that 100, 60 will be our principal repayment and 40 is our finance expense.
Right.
That is that 40 rupees is basically, instead of going as a write-off, is going out as a finance cost.
Correct. So just, the standard has given a bit of a relaxation, I would say. What it says, generally if the amount is received within a year, there is no financing component. What it says, the impact will not be material.
Okay.
However, suppose you are receiving the entire 1000 rupees, the example which I gave, you receive the entire 1000 rupees after a year only, then you cannot, or say after 9 months, then you cannot say the impact is not material, because it uses the word material. And again, the material is one of the things, materiality is the mother of all accounting standards.
So again that disclosure will come that beyond 6 months we have considered materiality or something like that.
May not be, because it's again not beyond 6 months, it's what's the total impact which is there. And if I talk about materiality, the Ind AS 1, which talks about the disclosures in the financial statements, it also says what does material mean. Material can be materiality depending upon the income or for the respective item of the income statement. So there are different parameters by which an item can be material or cannot be material.
Percentage vis-a-vis the volume of the business of the company.
That will also be one of the indicators which you have to look at. Say my profit is only 500 and that item is having an impact of 100, so that will become material. In spite of that, percentage might be very less.
Just to clarify, this expected credit loss which you said just mentioned, is it just the trend of non-recoverability or is it the delay in recovery?
Both.
Both.
So when it says both the non-recoverability and delay. Because as I told, the entire standard is based on the fair value. When I am receiving something after a year, so it's not actually the same amount which I have given on day one. And it not only says the trend is something which we commonly use, because that's one of the, it says you also need to take into cognizance the present economic environment. Say for example, today the demonetization is there. So yesterday I must be receiving my amount within 60 days, but tomorrow it might not be a reality. So I also need to take into consideration that.
Sir, say for bad debt, say we have a policy that beyond 12 months or 365 days we are writing.
Right.
Now, there is a past trend of the percentage of the total sales that is being written off.
Correct.
So, say for financial year ending on 2017, what should be our strategy? Say in a sale of say 100 crores, so say 2%, that is say 2 crores, we might be have to write off, or 1% is 1 crore. So will that future writing off will be have to be accounted for?
So see, right now a lot of companies, actually generally the MNCs, they have got a principle of overdue debts more than 6 months, more than 12 months, they are providing on a certain percentage basis. So that's fine, but now what you also need to do
So
besides
we are
that,
not providing, we are just simply writing off.
that's fine, providing or writing it off. So now what you also need to do, say for a debtors within a bracket of 0 to 6 months,
Okay.
you have to estimate how much of that will move into
In the financial year 17-18.
6 to 12 and beyond 12. And
That
that
is
provision
past
also
trend.
you need to take at
That
day one.
basis would be past trend.
Past trend.
Last 1 year or 2 years.
Past trend, in absence of any other objective data, past trend will be the most commonly used
So
data.
accordingly, that assumptions we have to account for in 31st March 2017 itself.
Yes. Yes.
See,
Just
I
one
was
question.
working in a company where it was being done on a line of business basis, also domestic, overseas separately. They used to have separate
Right.
credit policies. So that means we have to do by way of a line of business specific or even customer specific.
So I will just give
This is
an
also very
example.
important.
Say,
Customer specific is also there.
has to be done. Say I am making 90% of sale to normal customers and 10% to a government company, say a defense.
Yes, yes.
So my payment terms will completely be differ. So when I can see the payment terms differ from one category of customer to another,
Yes.
it can also differ from region to region. Say for export sales and the domestic sales.
Exports, we have overseas customers, different trade policy altogether.
So those things also needs to be taken
That
into.
means customer specific calculation has to be done.
As well as line of business.
Say the common example, the industrial consumers and the general consumers. For
Sir,
industry.
we have government companies and private sector companies. The government companies are paying much later. Much later.
But they are secured.
No, they are not secure.
Government companies sometimes are
No,
mostly
no,
secured.
they are not secure. Most unsecured. Indian Oil or whatever.
And earlier
And
concept.
we have customers like ITC, Hindustan Lever. Now that means you are saying that for customer specific, a customer with whom I am having a 60 days of credit limit, they are paying say 6 months. Another customer with 60 days is paying on an average after 10 months. So these different assumptions we have to incorporate for different customers and
Yes.
accordingly calculate has
Yes.
to be done.
Yes.
It's a huge
In
expense.
fact, our strategy meeting says you have to be extra cautious on government dues nowadays.
Right.
I have seen a railway company, a wagon manufacturing company, the 10% retention is paid,
Hmm.
and the railways never pay that. Years
Right.
together, if you look at the balance sheet, for
Right.
5 years, 6 years, that 10% retention hasn't come.
Lot of traveling cost.
Right. And just to add to this, this 109, the Ind AS 109, which is on financial instruments. So you can say India is the first country in the entire world which is adopting it. So you don't have a history, you don't have the experiences which you can collect and you can do the accounting. So we are the first one which has moved into this 109 regime.
So just one small query, this foreign currency loans, earlier, conventionally we used to evaluate at the rate, the currency rate or the exchange rate on the date of the balance sheet, and we used to reduce it from the asset value or take it, provide it liability or, in income. So now what needs to be done?
So see, the foreign currency loans, still you will restate because it's a monetary item, so you will continue to restate it at the closing date. Earlier the para 46 and 46A was there, which allowed companies to capitalize the foreign exchange losses. So now there is a specific carve-outs. This is not under IFRS. When I say carve-outs, which are only meant for the Indian scenario, where it says, there are two important things which it says. If you were capitalizing those under Indian GAAP, then you have the option. If you want, you may or you may not. So you have got the option to continue with the existing policies for the loan which is taken up to 31st March 16. So I am talking about phase 1 company which has moved into Ind AS from 1st April 16, right, with a 1-year comparatives. So all the loans which you have taken up to 31st March 16, still you can capitalize those exchange losses. But any loan which I take it today, I will not be able to capitalize it. So it directly goes to. So the idea is, what I understand, the idea is they want to move to the IFRS thing, will not allow you to capitalize exchange losses. But considering there is not too much of hardship, so they have tried to phase it out. So all your loans which are there till 31st March 16, it will continue for 5-10 years. You do
Same
that.
practice. And fresh loans, you take the exchange loss to the promoter.
Yes.
So another thing, when we are going for a first time adoption, say, whatever the existing things are lying in our books, that has also have to be discounted for or level measurement.
So if I talk about 101 clearly says when I am preparing my financial statements on 1st April 15, I am doing as if I was applying Ind AS since the time company was incorporated.
Okay.
Only exceptions are, to make the life easier, there are certain
Carve-outs.
exemptions.
Exemptions.
Exemptions are again classified into optional and the mandatory. Those exemptions you can take. If there is no such exemptions, you have to do it. Since
An opening balance sheet and PL OC have to be done as of 1st April 2015 or whatever, 1st April.
so right, so PL will not be there. When you prepare the first date, it will be an opening balance sheet, and all the adjustments which you do goes to your retained earnings, and PL comes thereafter
Retained earning.
because that is as on date.
Retained earning as of 1st April.
Right. So if I talk about few of the exemptions which are there and which are generally applicable in a lot of companies, are say for fixed assets. for fixed assets, it gives you a couple of options which are there. Either you can do a historical recomputation of the cost. So when I say the historical recomputation under the Ind AS principle, so say my company was 100 years old. So I have to go back to 100 years, take out the papers and do the capitalization as it is required under Ind AS. Because under Indian GAAP, earlier when there was a guidance note on the pre-construction, pre-capitalization and all those things, there were a lot of expenses which were being getting capitalized. So either we can do that. Second option which is there is I do a fair value as on 1st April 2015. And that fair value becomes my deemed cost. So what I say is, suppose the cost of my PP is rupees 100, I do a fair value. Fair value becomes rupees 200. So 200 becomes my cost on day one. I will forget about rupees 100. 100 has nothing to do. 200 becomes a starting point, and I start depreciating on the basis of.
And then that.
And just to complete here, this true way there under IFRS also. So what you can do, say I've got two mobiles, right? So one mobile I can do a historical recomputation.
Okay.
One mobile I can do a fair value. So interchangeably, when I say it's not only among the classes, even within the same class, mobile, office equipment, or whatever it is, furniture, I do one fair value, I do one historical recomputation.
That is also allowed.
That is allowed. Only on date of transition. I am only talking about 101 date of transition.
On the date of
Now to make life a bit simpler for the Indian companies, what MCA has done, they have also allowed you to take the previous GAAP value. So say my audited balance sheet on 31st March 16 was 100. I just take 100. I do nothing. Chapter close. That makes life very simple.
Very simple.
I just take 100. However, if I take 100, I have to take it for the entire class of PPE. Then these two options cannot be applied. If you take 100, you just do nothing. 100 was there in your balance sheet. You put 100 here. However, it has got, this is not there under IFRS. So suppose a company which is looking for a AIMS listing or want to do a IFRS subsequently, they have to again undergo the entire exercise. So that's why when we discuss or when we are discussing, the first time balance sheet becomes very important.
Very critical.
Very, very critical. The accounts which we are doing for 100 years, I have to undo everything on day one. So, and the choices which we take, it's not only the immediate impact, the impact which it will have.
Yes.
Say for example, today I make 100, 200. My depreciation from next year will increase.
Exactly.
My balance sheet is looking good, but on a year to year, when the investor, the stakeholders look at profit and loss, it has gone for a toss.
Your dividend will come down.
Everything comes down. The lenders looks at the profit number, balance sheet is there. And this rupees 10 is the incremental depreciation that goes to your profit and loss. That is not recouped with your retained earnings.
It strain on your future profitability.
So there are a lot of things which you need to
And
evaluate.
it will have impact on tax computation, deferred tax.
Everything. I'm saying, so it's not so simple that.
I have one.
Yes, now you, please.
What you are saying that 200 rupees you revalue. So against that 200, that useful life as per the new Companies Act, that has also have to be revalued. Say previously it was under 13 years bracket or 15 years bracket. So will that be also freshly revalued? Only the value or the life also?
See, when I look at the standard, now it talks about the useful life. There is no predetermined life which you have to take. If the life of this mobile is 5 years, I have to take it as 5 years.
But sir, as per new Companies Act, it is 13 years, 15 years.
There also it says that the life you can.
Yes.
So now, the way the things are, it's primarily it has given you an indicative life.
Okay.
This should be a life. But actually it has moved from a schedule 14 where there was a life which was determined by the statute.
And the first option you told that you started from the inception as if IFRS is there. So it is better that third option is the most best.
I don't know, as I told you, I do a fair value, my PL goes for a toss. Suppose a company net worth is eroded. Say if there are losses, it's a commodity play.
Most of the companies.
I want to improve my balance sheet, so I might go for a fair value. I will not worry about the impact which it will be having in the subsequent years. I do a fair value today. So one option doesn't suit for all. It can be a different depending upon the health or the wishes or what I want to do.
So if I understood properly, all the assumptions or fair value measurements and everything, there have to be a very broader business plan because it will have impact on your future profitability as well as budgeted income, everything.
Right. As I told, some time back, we should not look at Ind AS as an accounting change. It's also impact the way we do business,
Yes.
the business decisions,
Business plan.
the agreements which we draft. That will undergo a change. So it's more than just an accounting change which is there.
Because what he discussed that security deposit, it will increase your income. In some way, again, you are
It's the most common example. Every day we are giving out property on rent, taking security deposit.
security deposit is a,
Property companies, even companies having some.
even when we are taking some rented property, we are giving security deposit. That will also have impact.
So if anybody gives the security deposit in the books of, say you are receiving, you have discounted it and put it, say for the same example, 50 rupees a year. But what I should do, I am giving
100 rupees today.
Just the similar.
I have to say, do the same exercise.
Yes. For you it will be an expense.
Yes, yes, yes.
I have paid rupees 100 today. I will get it after 9 years. So this 100 is 50. So 50 is my expense. So actually this 50 will come as an expense over 9 years. And actually if you look at, this is the substance of the transaction. If today I am giving 2 months security deposit, my rent might be X. And if I give 1 year security deposit, my rent might be X minus something. This is how the security deposit in the transactions are being done. So,
Will the receivable and payable numbers match?
No, because again there will be a mismatch. But if you look at a 9 years, then because there is a straight lining of the rent, so over a period of 9 years the PL will be the same. But on a year to year there will be a minute mismatch. Which
Obviously. Sir, discounting, what are the discounting factors to be taken? Has there been any indications given in IFRS or India what rates we should take or whatever?
So it will be the incremental cost of borrowings. The EIR which we say is the incremental cost which is.
If the borrowings are very insignificant compared to the total net worth or whatever, is there any alternative rates?
So what it actually says, the rate which is applicable, even if you do not have a borrowing, if I borrow it today, so what's the rate? If not, I will take up bank rate,
Indicative
the
rate
minimum,
today.
the minimum bank rate which is.
This is subject, you have to credit rating, obviously.
Sir, could you just illustrate one clause in the agreement which might change? For example, if I was supposed to look at the agreement, what are the finer points that I should concentrate on, which can have a material impact in the future going?
Right. So see, if I say between two private parties, the terms of an agreement, I am giving a very simple example. Terms of an agreement is 40 years. If I can reduce the terms of the agreement, say 20 years, it changes the entire accounting. If it's 40 years, assets moves out of my books. Now if assets moves out of my books, no one might give me the loan,
Yes.
because loan is given on fixed assets. Once it becomes my financial assets, no one might give me a loan.
So one example I'm giving you, since we are a healthcare organization, we procure a lot of medical equipments,
Right.
pathology equipments. Now, for those equipments, the arrangement is that with foreign companies or whatever, that asset will be purchased from them, and also the consumables that is used in those pathological tests will also be procured from over a period of say next 5 years. Now, as a result, what happens? Your asset cost, they reduce it much less. But the consumables, there is a commitment for procuring it, and the rates are fixed by them in the agreement itself. And those consumable expenses, if you have buy it independently, first of all, those consumables are basically aligned with those equipments. medical equipment. Now, if you had purchased separately, maybe it would have been much lesser. But since your asset is being discounted and your consumables has, so part of that consumable cost is actually part of your asset cost. So in this current scenario, will that have to be capitalized or how it will be computed? First of all, those details will be required.
In
from the
all
vendor.
probability, it will have an impact. Your fixed assets, which is actually 100 and you are recognizing at 60,
Yes.
will move to 100. In all probability, again we have to look into
But
the
for that breakup is required from the vendors.
that will
So
be.
under Ind AS, you have to the purchase department or procurement department also have to be made aware and also the requirements with the vendors have to be
yes.
for those most of the agreements.
Right.
I think.
But
That-
in practical,
so-
practical sense, it will be very difficult. It is because in future, say for 5 years, the agreement has been done, and the cost and comparative we make it today, but for tomorrow or for next period, we will not be able to.
You have to
Another
do-
challenge will be that vendors will not be very willing
Providing,
to disclose the
yes,
details
disclose
because
this,
that are their
because it's
internal.
the same thing. One example which is given is happening in our cement industry also. The suppliers or the vendors are supplying the machinery at very competitive cost, and the spares or whatever the consumables they are supplying, they are getting those prices.
So see, I understand the difficulties which will arise out of it. And again, I am saying, again you have to look into the terms. If the terms specifically says it's at a discounted price, then you have to do the accounting.
No, that terms is not
No,
written,
sometimes,
but it is obvious.
sometimes they are not forcing us, but due to the nature of the machinery, we have to go to them.
Exactly.
Because
We will
in
not do
market,
that. See, what I'm saying-
there are little bit changes or some software changes they do.
Right.
That other similar type
This
of.
is applicable for Philips, this is applicable for Johnson and Johnson.
What I'm saying, say for the OEM suppliers, till the time it's at 100, I'm paying to everyone and the company is also paying 100. It has got no impact. The impact is only when I'm saying others are getting it 100 and I'm getting it 120.
Or otherwise, two agreements have to be done separately, one for the asset purchase, one for the consumables. In one agreement, all the clauses should be.
So you have to look into the things, and as I told, if it's not material, you can ignore it. But the fair value things is going to come time and again in everything which we are doing. Now we have to live with the fair value.
And sir, as a corporate house or everything, for fair value measurement, how it has to be done? Some outside agency, some valuer, because I think in-house accounts and finance people will not be able to do it because they may not be equipped also.
So just to
technical people will
Correct.
be required as well as the.
So
statistical.
just to give you a background on the fair value, the Ind AS has got one standard only on fair value,
130.
130. So you can understand the importance of a fair value, and I can safely say for a medium-sized company also there will be some other instrument which will fall into a fair value.
Okay.
And what it says, it defines fair value. There are 3 categories: level 1, level 2, level 3.
Yes.
Level 1, Reliance share listed in NSC. Prices are there. Level 1. You don't need anyone.
So what will be the fair value according to that market? price?
31st March, the price which is there in the exchanges, on the exchanges.
That is the fair value of their equity share.
That's what I'm saying. I got an investment in Reliance. I have to do a fair value. So that's the fair value.
Readily available.
And I have to do nothing. The challenges increases as I move down.
You are saying about the instruments.
I'm talking about the instruments.
But there may be some other items also.
Right, say the level 3. Level 3 is the most difficult one. There are a lot of approximates, lots of things which has to be done. Say for example, your unlisted entities. I might not be able to do a fair value for that. I am not competent enough to do a fair value for that.
Brand value.
Land value,
Brand.
yes,
You have a brand.
right.
Say. So brand is also have a value.
Brand also has a value. I mean, I will just park that for 2 minutes. So so this is, and as you move the level 3, suppose if there is something which has to be done as per level 3, then there are a lot of disclosures which you have to do. Level 1, simply, Reliance shares valued as per price. Now level 3, your disclosure might run up into 3 to 4 pages. Why? Because they understand there are a lot of estimates which has to be done to arrive at a fair value. and they want the users to know what are the assumptions or what are the estimates which you have done to arrive at this value. So the disclosures increases.
No, even in case of say listed shares, the price in NSE and BSE were different. Which one to be taken?
See, there will be an arbitrage gain which is there. So generally it will not be too significant, and that's the difficulty which is also there today, right? So you take for any of the policy you have to define. You cannot just take it for one NSE, another for BSE. So you decide I will take all the listed equities NSE. So you take the NSE. And the difference should not be very material. I will be extremely surprised because there are a lot of people who are sitting there for the arbitrage gain. So there will be an arbitrage gain which will be there. So this is generally will not.
It is also possible that I am having 1 lakh shares of a particular company, frequently traded or infrequently traded, rarely traded, and there is a trading on 31st March of say 100 shares only. So can I value 1 lakh shares at the price of 100 shares which has been traded? There is no trading for a month long. There is a particular trade for 100 shares on a particular date, 31st March. Maybe it is manipulated by the promoters only. So can I?
So might be you will not take the 31st value for the 100 because that's not actually a fair value.
Yes.
If you look at what I understand, SEBI also has come out with what are the shares which are being regularly traded and which are the illiquid stocks. So the illiquid, actually the trading price, the last, might not be a fair value and you have to move to a level 2 and level 3. And the other important thing which it says for the levels which are there, if a company is into level 1, then you stop there. Say Reliance,
Yes.
the price is 100. I can't say that the fair value is 1000, I will go for level 2. Level 1 close. Nothing else needs to be done. Now coming to the brand valuation which you are saying, IS, the intangibles by and large is same as it was under Indian GAAP.
Okay.
So recognized intangibles will not be recorded as an asset. However, if I do a business combination, I acquire this company, under Indian GAAP still cost accounting and AS 14 was there. Now everything changes. I acquire this company, everything has to be fair value. And I can say with my experience, I am looking after a couple of transactions which has happened recently. This is a mammoth task. Why? Because not only when I say fair value, not only the fair value of assets, I have to do the fair value of all the intangibles also. Why? Because this company is acquiring all the intangibles. Say for a cement company you say, I have got a huge dealers network which I have built over 10 years. So that also I might have to value it today.
But then it is quite possible that two chartered accountants are two persons of similar standard, of very high standard, reputed persons, may value it differently. I may value it 10 rupees, you may value it 20 rupees. Fair value.
Generally should not.
You can give different assumptions, I can
Any two valuers cannot do the same valuation or same range of valuation. They generally give the range of valuation and their range may vary.
And the assumptions are also different. The assumptions are also
Depending upon their view on the particular industry or particular, they might use premium or some other discount. So there will be a huge gap. Then what
So generally, when you do as I told, there is a specific standard which lays down. Earlier what was happening, when we were doing a fair value sale, firstly there was no standard. What we are talking about today is based on our past experiences. Because there was no standard, there was nothing which was there. Someone was doing DCF, someone was doing breakup, the intrinsic value, this is the fair value and the differences was there. If I do a DCF today and I do an intrinsic value, the value may differ, will significantly differ. Now there are parameters which have been there. It is strictly laid out. I will be there can be difference from one to other, but I will be extremely surprised if it completely changes.
So another point, when Professor Mukherjee was telling that employee defined benefit plans and all this, that have to be shown in the OCI instead of the PF. Presently, this is being included under employee cost. Say for gratuity, every company generally has a defined benefit plans. And for leave encashment, they have ascertained liability but not funded, unfunded. Actuarial valuation. Now, these two items, the charge for the year, and the difference of the valuation, less the payments. where we will put it? At the in Ind AS or
See, only the actuarial loss is moving to your OCI.
Okay.
The other things remains into the PL, the way it was earlier. And actuarial loss, when it goes to OCI, it lifelong remains in OCI. There are two components of OCI. One which is recycled to income statement and one which is never recycled. So this always. So when we will present OCI, if you look into the schedule 3, it also talks specifically items which will reclass and which will not reclass. So actuarial is always there. It always remains.
At present, where we are showing it, that actuarial loss.
Presently we are showing under the gratuity employee cost.
Employee.
So abhi kya hai, suppose my
Actual
total
loss portion will come down into the OCI.
correct.
We have a
This actual loss is basically nothing, your opening balance plus minus the payments made, closing provision. The difference, the incremental provision that is returned, that is your actual
No,
loss.
actuarial loss is, when I say actuarial loss, the gratuity when I do actuarial valuation, there are 4 components. Interest cost, current service cost,
Right.
and actuarial gain loss.
Right.
3 components.
Right.
Or if there are some changes, then past service cost.
Right.
So current cost, service cost, all remain under your employee benefit. When I say actuarial loss, it's just the actuarial gain or loss. Suppose today my discount rate 31st March 16, I close at 7.75 to 8%. Today, if I understand it rightly, it's between 6.5 to 6.75. So the loss which comes tomorrow on account of this change in assumption.
That means that out of the 3 components, 1 component
Right,
will go
right.
to OCI. Yes, for gratuity it is okay, but for unfunded leave, entire thing will come down to OCI.
No, that will remain in the
There also that actual loss will come down there,
Yes.
and the 2 components will remain.
yes.
Only for defined benefit
Only for defined
not for
benefit.
contribution.
Not for
No, for defined benefit.
defined benefit. It says the defined benefit.
Unfunded, funded is not a right.
We have a holding company in India and having 2 subsidiaries in other part of the Africa, South Africa. But we have never valued our brand value. So whether for now, for consolidation purpose, we have to evaluate our brand value also.
So these companies you acquired, this company,
Simple consolidation.
so these companies you acquired,
No, it is our, it has been covered by ATW.
so there will be, as I told, only in case when you acquire, there can be a,
Goodwill or whatever.
no, only when you acquire, there will be a opportunity of recognizing the brand. Self-created brands, as it is under AS 26 now, will not be recognized. So suppose the company Reliance, now that it has become Reliance over last 30 years, so today if Reliance wants to recognize the brand value of Reliance, they cannot do. But suppose today Reliance acquire another company XYZ, so they can do a fair value of brand XYZ. So that can be done. And what it says, just as we were talking about the exemptions which are there, business combination, as I told, you go back into the history, past, take out the details. So business combination, fair value, for all the business combinations we have done in past. Suppose Reliance has acquired 100 companies. So I do a fair value of those 100 companies. Ind AS 1, it gives you an option. You do a fair value from the date of transitions. You ignore all the business combinations of past. Or if you want, you can select a date. Suppose I select a date, I did a very good deal 3 years back when economy was meltdown. I got something at a very, at a very throwaway price. So I take that as a cutoff. I take 1st April 13 as a cutoff. 1st April 13 ke pehle everything as it was. From 1st April 13 I do a fair value. So as I told, this 101 is very, very, very important. You can just improve your balance sheet. What you need to do, you need to start at the right time. Because you just start at the time and you need to prepare your balance sheet, you might not be able to take these choices. So you have to apply, you have to engage with the early so that you can take the right kind of a decision.
Excuse me, this question of brand valuation comes only when the company is acquiring another company, otherwise not.
Self-created I cannot.
Okay, whatever may be the value. So only when a company is acquiring another company, the question of brand valuation and its valuation of the brand.
Only just
No,
tell them how
if a
to
company
Ind AS first
Just
Just take
learning
the
what
mic.
is the
Mic.
sources and all
Just
these
give him the
things.
mic, please. Switch it on.
What are the sources and they
Switch
want
it
to
on.
learn.
Sources of
Learning, how they can learn fast. They ask me for good
If a
books and all.
company, not company, let us say a proprietorship or a partnership firm, a small, not a small firm, a large firm, but a partnership and proprietorship firm, right? It is having, say, on 8th of November 2016, cash balance of say 70 lakhs. It may have, there is no issue. But it is depositing 10 lakh, 15 lakh, 20 lakhs in 500 and 1000 currency notes, which has been demonetized now, and it has deposited 10 times. As an auditor, what should I do? I should suspect a fraud. What should I do? Because it may have been possible that there have been transactions after 8th of November in this old currencies. The company is accumulating those currencies and giving other notes on discount at say high prices, and it is making profit in between. So what does an auditor should do? Because frankly speaking, whatever currency that I do have, I should deposit in one go. It may be 20
Right.
lakh, it may be 50 lakh, it may be 18 lakh, whatever it is, I should deposit in one go. Maybe not at 10th of number, I am not possible because there is a huge queue. I deposit on 11, 12, 13, 14, on whatever day. But that should be deposited in one go rather than going in a series of transactions, depositing again and again, because they are saying that this
I got your question. So, first of all, this has nothing to do with Ind AS. It was on a lighter note.
No, this is a
See, what I am saying, there is no right or wrong. I follow this 5 or 6 process. What I personally believe, there is a natural aptitude of an auditor. Depending upon different circumstances, what process do I apply? The first thing which I look at, if you are saying a cash balance of X amount, I will look into the history that did ever a company had such a balance, and how frequently company is depositing this. If company was depositing on a daily basis, so the next question which comes to my mind, what was so special on 8th that I have so much of money which I did not deposit it for last 7 days? The other thing which can be, I deposited on 8th afternoon, still I have got 80 lakhs. So what happened that I got 80 lakhs?
Or you can have a on
So there can be different things.
eight you can have the breakup of the currencies.
No, but they don't have those kinds because they are not regular. As per no regulation requires them to have a breakup. The 500 rupees so much notes. No regulation requires them. They could put up it later on.
But
After someone they will say.
As I told, you need to see depending upon the fact pattern. As I told, did ever they had 70 lakhs rupees? How frequently they are depositing the money in their account? I deposited suppose on 8th, because see, again I am saying lot of things I cannot undo which I have done prior to 8th of November. I can only do which I am doing after 8th.
Yeah.
So I deposited on 8th 1 crore rupees, and again I have 70 lakhs, and always I have a balance of 5 lakhs. So as an auditor, I will at least have a right to ask that question. That sir, why
Without
this?
getting a proper answer.
How I ask, how I say,
See, transporters are allowed to pay to petrol pumps in 500,000 rupees notes. But transporters are not allowed to accept 500,000 rupees notes from their clients. But they are doing so because they have got a other line to disburse the notes back to the petrol pumps. So they are taking back, but they are not allowed to take it.
See what I am trying to say. Neither I am saying everyone who is having 70 lakhs on 8th of November is wrong, nor I am saying everyone who has is right. It will depend upon the facts and circumstances. And I believe as an auditor, at least I have to keep my eyes and ears. This is the limited point which I am trying to make. There can be, company might be having every time 70 lakhs, it's having 70 lakhs.
No, but it should be deposited in one go. In my opinion, it should be
It depends. Let's see, this is.
आप देखेंगे वो अपने उच्ची नहीं है
नहीं, आप कितना 10 लाख जमा किए जा रहे हैं 2 लाख 5 लाख
आप मान लीजिए 17 लाख लेकर
नहीं ये है
Anyway.
So we will discuss this some other time.
नहीं अभी देखिए क्या हुआ कि फर्स्ट डे जब उस दिन ये डिसीजन आया द मोदी
This is an Ind AS class.
on that day they didn't mention that 12.50 lakhs you can deposit in your current accounts, so they deposited only 2 lakhs. On the concern, I would not name it. They deposited only 2 lakhs 50,000.